You know, when you see those golden arches, what do you think of? Burgers, fries, a shake, right? But what if I told you that the fast food is just the side hustle for a much, much bigger business?
So let's ask the big question. What is McDonald's really selling? Because once you know the answer, you'll never look at one of the biggest brands on the entire planet the same way again.
And look, don't just take my word for it. This is straight from the guy who basically built the company's financial engine. Harry Sonneborn, the very first president of McDonald's. He said it plain as day. They're not in the food business. They're in the real estate business. The food? That's just a great way to make sure their tenants can always pay the rent.
So, how in the world did a hamburger stand morph into a property titan? Well, it wasn't the plan from day one. In fact, this whole brilliant model was born out of a moment when the company was on the brink of failure. To really get it, you have to look at the original math. Founder Ray Kroc was trying to build this massive empire on a measly 1.9% cut of food sales. I mean, think about that. The model was basically starving the company of cash, and his dream of huge expansion, it was hitting a serious brick wall. And you can see the impact of the change right here. It's night and day. Before 56, growth was just painfully slow. But the second Harry Sonneborn creates this franchise realty corporation, the whole thing just ignites. By 1960, they're at 200 locations. A decade after that, over 1,000. This property-first model wasn't just a little better, it was a total game changer. So what did this playbook actually look like? What were the mechanics? Well, this is the financial engine that really turned McDonald's into the powerhouse it is today. The rear magic is in something called a triple net lease. It sounds complicated, but it's actually a brutally simple and powerful idea. The franchisee, the person who's actually running the restaurant, they pay for almost everything related to the property. We're talking taxes, insurance, repairs, all of it. This lets McDonald's corporate just sit back and collect rent checks with almost none of the usual risks or costs of being a landlord. And the rent check itself is genius. It's got two parts. First, there's a fixed base rent. That's the floor. It guarantees McDonald's gets its initial investment back, no matter what. But then, and this is key, there's percentage rent. Once a restaurant's sales hit a certain target, McDonald's gets a piece of the action. So they have a safety net, and they get to share in the success. It's the best of both worlds. Now this chart tells the whole story. It shows you exactly where the real money is. Look at the profit margins. The food sales from the stores they own themselves, it's okay, around 15%. But the margin on the rent they collect, it is a staggering 80+%. That right there, that's the profit machine. So you take that incredible model and you repeat it thousands and thousands of times over decades. What do you get? You get a global empire of some of the most prime, strategically located real estate on Earth. Officially, if you look at their balance sheet, McDonald's values its property and all its equipment at nearly $44 billion. And yeah, that's a huge number. But it's based on what they paid for this stuff, some of it all the way back in the 50s and 60s. But here's the kicker. The true market value today, analysts figure all that land and all those buildings are actually worth well over $120 billion. They are sitting on one of the most valuable private real estate portfolios in the entire world. And the power of that portfolio is just stunning when you look at profitability. McDonald's has an operating margin of 45%. That means for every single dollar that comes in, 45 cents is profit. That's a higher margin than tech giants like Apple or Netflix. And why? Because its real business isn't selling low-margin burgers, it's collecting high-margin rent. At the end of the day, it all comes down to one word: control. By owning the majority of the actual land and an even bigger majority of the buildings, McDonald's corporate gets to call all the shots. They can force remodels, they can test new store designs, they completely control their physical destiny. But a system that's this incredibly profitable for the corporation, it's not without its issues. This whole landlord-tenant relationship creates a deep, fundamental tension inside the McDonald's family. You know, Ray Kroc always loved to talk about his three-legged stool. The idea was this beautiful, balanced partnership between the corporation, its franchise owners, and its suppliers. It's a wonderful philosophy, but when one of those legs is laser-focused on maximizing rent, the stool can get pretty wobbly for the other two. And here's what that wobble looks like in the real world. Franchisees got so fed up, they actually formed their own independent association to push back. They were fighting things like being forced into multi-million-dollar store remodels, seeing their rents get jacked up, and dealing with new fees and surprise inspections that just added a ton of pressure. And this isn't just some minor grumbling. In 2021, a record number of restaurants were sold. A lot of longtime owners, people who'd been in the system for decades, decided to just cash out. They felt that the old collaborative partnership was gone, replaced by a culture of just getting orders from their landlord. So, with all this friction, why doesn't McDonald's change things up? Why do they protect this model so fiercely? Well, because at the end of the day, it makes their business a nearly indestructible fortress. For years, you've had these big shot investors arguing that McDonald's should spin off all its real estate into a separate company. They say it would unlock billions in value for shareholders, but management has always refused. And the reason is simple. If they give up the property, they give up the ultimate control. And that control is more important now than ever before. Our habits are changing. We're all about delivery and digital orders now. McDonald's has to adapt its physical stores. Because they own the property, they can rapidly build new drive-through only spots or special kitchens just for delivery. They can future-proof the brand without needing to ask thousands of different landlords for permission. Which brings us all the way back to the beginning. Is McDonald's just a landlord that happens to sell burgers? The evidence is pretty darn compelling. So next time you're sitting in that drive-through, just remember, the most valuable thing on the menu isn't the Big Mac, it's the dirt it's sitting on.